Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure: all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure: trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. And as a reminder, the focus of my presentation and the focus of the Options-Doug chat in Discord is options, order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. And I have a two-step process for trading. The first is planning, and I use positional analysis. And I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step in my process is execution. And I look at real-time order flow in Bookmap and real-time market maker hedging flow with Spotgamma Hero to confirm my thesis and for setups for entries and exits. And on topic questions and comments are welcome, and I will be watching both the Discord Options-Doug chat channel as well as the chat in YouTube. So again, your questions and comments are welcome. All right, let's get started. Hello, JEC. Hello, Rob. Glad you're here. Okay, so what I want to talk about today is some news items, economic data, and events. Then we'll go through the positional analysis, and then finally we'll talk about setups. All right, so first of all, economic data. I talked about this yesterday. There's really no headline events this week. The normal first Friday of the month employment situation report has been moved to next week. So instead of coming out on the 3rd on Friday, it is going to be on the 10th, the Friday week from Friday. And one other thing that I forgot to mention yesterday is tomorrow is Tesla, their investor day. And I don't know what time that is. Maybe if somebody does, they can type it in chat. Again, I don't know what, but that is the investor day for Tesla is tomorrow. Okay, and again, otherwise there are various more minor economic reports coming out this week. All right, let's talk about our positional analysis. And first of all, I'm going to take a look at the ES. This is the S&P 500 in Bookmap. And before I dig into this chart, let's take a look at a little bit larger time frame to get a better picture of what's happened the last few days. This is the SPX, and this is a thinkorswim chart, and this is showing the Spotgamma levels in a think script. So this is just showing price and levels, and these levels are provided to Spotgamma subscribers for a variety of platforms, both thinkorswim, which I use, as well as Bookmap. And the things to point out here are the key levels, and we'll look at this more closely as we go on this in our positional analysis. Here's the put wall at 3,900, and this level today, this 39.74, this is SPX. 39.74 was noted as support in the Spotgamma AM Founders Note, and it acted as support and a good entry point for longs multiple times today. And then this is the 4,000 level. That is the key gamma strike, and that's also the volatility trigger. And then here's the call wall way up here at 4,200. So those are the levels that are in play, and really the levels that are in play today is the 3,950 to the 4,000 range. So that is a 20-day chart. Now let's take a closer look at a shorter time frame chart in Thinkorswim. This is just today. This is a 1-minute chart just for today, again, SPX, and showing this 39.74 level of support. And there's the 39.50 level below, and the 4,000 key gamma strike, and also the volatility trigger above. And I'll talk a little bit about more about what these levels mean in a minute. All right, so that is the setting the stage, showing where the SPX has traded for the last few days, as well as today. Again, just looking at price and levels. And levels are also shown on this chart. And in this current range, there are no Spotgamma levels other than this 39.74. This is SPX 39.74, again, the support level. And so anyway, again, not the other Spotgamma levels that would be on this chart are the 39.50 and 4,000. And right now, and these are SPX levels, and again, SPX is trading between those two levels, as we just show on the Thinkorswim 1-minute chart. All right, so again, the thing to note here is this 39.74, and I'm showing this in my cloud notes, this C levels column. These are my cloud notes, and I'm showing key SPY levels, nothing here on that chart. And then this support level, this is again noted in the AM Founders note. And JEC says he calculated that level at 39.78.75. So that, yeah, that's probably closer. I just did a quick look at a watch list and just did a quick conversion of 6 points. So that points out that there is a difference in value between SPX and SPY. Spotgamma is using a 10-point difference, and that difference I calculated as around 6 points. And then it looks like JEC got a slightly different calculation. So this level should be down a little bit lower, but it's close enough. Okay, so SPX, SPY trading in a narrow range today. And those are the levels that are in play. Again, not much. So the key here was that support level and the long scalps off that level, multiple tests of that level until finally it resolved higher. And Spotgamma, in their note this morning, AM Founders note, pointed out how traders have been, zero DTE traders in particular, have been fading any moves above SPX 4,000 as well as below. So they're buying below, and you can clearly see that on this chart, and they're selling above like they did yesterday. And remember that SPX 4015 and then the 4017 volatility trigger acted as resistance yesterday. And let's see if I have that chart up. So this is from yesterday. And I talked about this yesterday, the reversal at that volatility trigger level, and that's another resistance level. And here's the volatility trigger. Let's see. No, that's in the wrong place. So anyway, resistance at these levels. Yes, this line that I drew, this top white line, is the 4017 volatility trigger. Okay, so that was yesterday, and the move back to around 4,000. So reversion back to from down below 4,000 up to back up toward 4,000. So in YouTube, Jono notes market grinding around the ES 4000 level. Yeah, it's at the ES 4000 level, and that can be an important level. Also, the SPX 4000 level, that is where the gamma is concentrated. Okay, so those are the levels in play. Let's talk about shifts in levels, and there was only one. So the SPY volatility trigger moved up from 396 yesterday to 400, and the volatility trigger is Spotgamma's proprietary gamma flip level, and that means that market makers' position below that level is negative gamma. That's their position on the gamma curve, and above it's positive. Okay, let's take a look at the gamma charts now, and we can see where these levels come from. So these are the S&P 500 gamma level chart, gamma levels, absolute gamma levels. What this is showing, here's the zero line, and this is positive gamma or call gamma above, shown with the black bars, and negative gamma or put gamma shown with the teal bars below. This is the 4,000 level, that's SPX 4,000, and that is the key gamma strike. And then down below the 3,900 level, that is the put wall. So the absolute gamma strike, or the key gamma strike, is obviously the strike with the largest absolute gamma. And then the put wall at 3,900, that's the strike with the largest net negative gamma, and that can be expected to act as support. And then here's 4,200 above, up above, that's the call wall, that's the strike with the largest absolute net positive gamma, and that can be expected to act as resistance. So hold on just a second. The reason I'm having trouble here, I think I might have lost power. My light switched off. Give me just a moment. Okay, I thought I lost power for a moment, but I didn't hear my battery backups going off. So, okay, so I'm all good. All right, so 3,900 put wall, largest net negative gamma, 3,900 there, 4,000 the absolute gamma strike, and then 4,200 the call gamma call wall, strike with the largest net positive gamma. So that's SPX. Here's SPY. SPY 400 is the key gamma strike. Again, the strike with the largest absolute gamma. 390 is the put wall. And then 420 is the call wall. And note here that there's still quite a bit of negative gamma, put gamma below the 400 level. Okay, let's take a look while we're on this page. First of all, the combo strikes. And this is combining gamma levels for both SPX and SPY, and showing those gamma levels in terms of SPX prices. So remember that 39.74 support level, and that's where that came from. So what Spotgamma noted in the AM Founders note was two levels of resistance, or support, I'm sorry. First at 39.50, and that's where the first level comes from. And there's the 39.74. So there's where the support levels come from. And then one other thing, while we're on this page again, let's take a look at the open interest and volume adjustments. And what this is showing, this is put data for SPX, and the black bars are showing volume. This is from yesterday, showing volume versus open interest, shown by these small teal bars. And open interest, this indicates traders taking positions in options that have more than 1 day to expiration. So these are trades in their opening positions, open interest, and changes in open interest, and strikes again with expiration greater than 0. And then these bars are showing the total volume, and this would be everything. So this highlights this difference in the total volume versus changes in open interest, would indicate that there was great amount of volume yesterday, but the vast majority of it was in 0 DTE options. And I think that has contributed to the lack of change in levels, because traders are just trading 0 DTE options, and there's no significant change in open interest. Okay, let's take a look at the NASDAQ now. And for NASDAQ, we'll just look at QQQ. NDX is not significant. So for QQQ, 290 is the key gamma strike as well as the put wall. And then 310 is the call wall. And note here that most of the gamma is, and especially put gamma, is located below the 300 level. All right, let's take a look at data now. And the thing that I always like to look at is gamma notional. And this is market maker's position on the gamma curve. And SPX is shown in the left column, SPY in the middle column, and QQQ in the right column. And you can see that all these numbers are negative. And this is again showing market makers gamma notional, their position on the gamma curve. And when this position is negative, that means that traders are long puts, market makers are short puts, and they have to sell futures to hedge their delta exposure as price decreases. And then as price increases and implied volatility drops, they can buy back those short futures. So in a negative gamma environment, they are trading with price, and this tends to increase volatility in a negative gamma environment. And the changes in levels from yesterday were mixed. So yesterday, SPX gamma notional was minus 530, and it has shifted to slightly less negative today at minus 502. And SPY gamma notional yesterday was minus 1901, and today it's minus 2035, so it has shifted more negative. So that is that's mixed for the S&P 500. And then QQQ gamma notional has shifted to slightly less negative. Yesterday it was minus 735, and today minus 698. So not a lot of significant change. All of these numbers are still significantly negative with minor changes from yesterday. And the Vanna charts illustrate that graphically. This is SPX, and this chart is showing market makers' delta notional or delta exposure in the vertical axis, and price, the strike price, in the horizontal axis. And this is showing how market makers' delta exposure changes with changes in price and with changes in implied volatility. That's shown by the green line. That's the current expiration, and that's the Vanna effect, the change in delta with a change in implied volatility. And what this is showing is, again, market makers' delta notional increases as price decreases, and they have to sell futures to hedge their delta exposure. They want to remain delta neutral, so this tends to increase volatility in a negative gamma environment. And the curve is this curve is pretty similar for SPY and QQQ. And this black line is showing how market makers' delta notional changes as time passes, and that is the delta, the charm effect, the change in delta as time passes. And finally, let's take a look at my key gamma strike list. And this is the list of stocks in my watch list. And remember, I have trimmed this down to just look at the stocks and the things that I'm trading. I used to have more stocks in there, and there were stocks like Snowflake and Block and Coinbase, and I really didn't trade any of those. I'd like to trade the S&P 500 and large cap tech stocks. So anyway, this is showing the key gamma strike from yesterday. That's shown in the far right column, the previous key gamma strike, and then the current key gamma strike is the key gamma strike for today. And then I compare the current key gamma strike with a previous key gamma strike, and I color code these either green or red. So green means that the key gamma strike increased from the previous day, and red means that it decreased. And this is just a quick visual reference, and Spotgamma provides other levels if you're interested in trading one of these stocks. Like NVIDIA, you could take a closer look at the NVIDIA, for example, in Equity Hub, and look at changes for changes in the put wall, call wall, and other levels. All right, so given all this information, my thesis for the day was neutral, and just like Spotgamma mentioned in the AM Founders Note, I was looking for potential moves back and forth around the 400 level, and using the Spotgamma levels as support, and then like I talk about in my introduction with my two-step process, watching order flow and hedging flow to confirm trades. All right, so let's take a look at some setups now. And we'll go back here to the S&P 500. And this is primarily what I was watching today. And the reversals at this support level worked out very well. There were multiple setups, and let's zoom in on this. And they were really strongly confirmed with order flow. So here's the first reversal, and you can see the shift in order flow. Notice all the pink dots. These are market sell orders, and then the shift to green dots, market buy orders, and price moves higher. And notice also the iceberg buys coming in, shown by this rising light blue line, as well as this, that's the subchart indicator for iceberg orders. And there is the on chart. And this is pretty typical that large traders will buy weakness, and they use these iceberg orders. These are CME order types. They use these orders to hide their size, and then Bookmap can detect those once they're executed. So you can see that traders are buying the S&P 500 as price falls, the ES, price reverses, and then this pink line is showing cumulative volume delta rising, and then this yellow line is showing buy stop orders. So that's a great setup with it's a little bit below this support level, but close enough. And let's take a look at, and it's a pretty similar situation with these others, other reversals, a shift from bearish order flow to bullish, and especially this last reversal higher. And you can see all the green dots coming in here, no more pink dots as price increases. And again, the buy stop orders firing off, cumulative volume delta rising, and iceberg orders rising. All right, let's go take a look at Spotgamma Hero now. And I'm going to zoom in on the morning. Let's go back at Bookmap. I'm looking at up until about 11:15. So let's see. We can take a look at the same time frame in Hero. So this is about right. And this is the total signal for SPX and SPY. So this is showing traders buying SPX calls, buying and selling SPX calls and puts, and SPY puts and calls. So here's the first setup. Hero rising, confirming the first long setup, and Hero rising again, confirming the second long setup, then Hero rising again. So here were the first long entry, second. I think this was that was the third, then the fourth. And let's see if I can find the 39.74 level. I think this is it right here. So again, that's close enough. And we saw that all of these long entries, and this is what I was looking at, long entries confirmed with order flow and hedging flow. Okay, let me check for questions. All right, there looks like the question is about Bookmap, so let's go back to Bookmap. So question CVP versus SVP. The CVP is the chart volume profile, and that is showing a volume profile for whatever I'm looking at on my chart. Showing it in this range from just a little bit before 9:15 to 11:15. And the session volume profile is the complete session using that's the volume profile for all the data that I have, and I'm using the backfill data, so I have S&P 500 going back to the open yesterday afternoon. And so this session volume profile is the volume profile for this entire session. So CVP again is the chart volume profile, and SVP is the session volume profile. All right, so that's the S&P 500. And one other thing, I do have settings different. So this is showing buy volume and sell volume, and in the session volume profile, and in the chart volume profile, I'm showing the delta. So buy volume minus sell volume. So you can see down here, for example, all of the sell volume at that level. So all those sellers offsides there, and buyers, aggressive buyers, come in and move the price higher, and then the stop orders fire off, helping to move price higher. Okay, that's the S&P 500. Let's take a look at some other setups now. And some of these took a while to play out. Let's take a look at Apple. And for me, this was the easiest read, the best setup today, the S&P 500. Very easy to read. Order flow and hedging flow, and a clearly defined support level that you could lean against. All right, so here's Apple, and let's go take a look at Hero. Apple, strong correlation between options trades, hedging flow, and price action. Let's go back to Bookmap. Here's Apple. And there's a question in Permabear was asking in Discord about CVD, and that's cumulative volume delta. And notice here, cumulative volume delta is decreasing, and price is going the other way. And you can see that all the pink dots there, all the market sell orders, yet price continues to go higher. And that, I think that illustrates, first of all, the importance of options trades in driving stock price. So we know that Hero is rising, CVD is falling, and yet price is making higher lows. And so that is why I take CVD with a grain of salt. And Bruce who does the advanced webinar every day at 10 a.m., has talked about this, and he doesn't really look at CVD often. And if it just happens to be going in the direction of price, then that makes me feel a little better. But I don't make any trading decisions solely based on CVD, and this is a good illustration of why I don't do that. So Permabear, I hope that answers your question. It's great when you have price action, hero, and CVD all going in the same direction, but sometimes it doesn't happen, and of course, price action comes first and order flow, and then hero is another confirmation. And yeah, again, JEC says good for confluence, but not entry indication. And yes, it's great when it confirms your entry, but it's not necessary. And often I don't even show it on my charts. So there's Apple. We looked at hero. Let's take a look at AMD. Let's go look at hero now. So there's Apple. Trader selling puts and buying calls. It looks like they're starting to fade the move higher. Apple price is stalled. Maybe it won't make it up to that 150 key gamma strike. Let's take a look at AMD. And here's another strong confirmation, strong correlation with options trades, hedging flow, and price action. And for those of you who may not be familiar what's on this chart, this is hero. This is Spotgamma, hero, hedging impact of real-time options. And this is showing options trades, market maker hedging activity, and price action. So hero is the purple line, that's the total signal, calls and puts. The white line is price, and you can also separate it out, puts and calls. So the orange line is puts, and orange line is calls, excuse me. So if the call line is rising, that means that traders are buying calls. That's a positive delta. And if the blue line is rising, that is puts. So they're selling puts, and that's also a positive delta position. And then the total line combines the two. So again, this is showing positive delta positions up to about 130, 120, something like that. Then traders started fading the move higher. All right, let's go back to Bookmap. So there were a couple of long entry points here. Let's zoom in so we can see this more closely. And good order flow confirmation here. Notice all the green dots, all these green volume bars here. Aggressive buyers starting to come in here at this 77, 70, 75, 80 level. And pretty good range for AMD today, 2 points with the 79 hedge wall and the liquidity at that level, the first target, then the primary target here at this 80 key gamma strike. And notice, this is so, this works out so well. Let's go back. Notice as AMD is approaching that 80 key gamma strike level and all the liquidity there, that traders are fading that move. And let's see what they're doing. So they've been buying calls all morning. You know, undoubtedly these are mostly 0 DTE. Let's take a look. Or not 0 DTE, these would be next expiration. And that would be the Friday expiration. So that's the green line. And notice how closely the green line matches the orange line. So that means that traders are buying the next expiry, and I'm looking at here's the legend up here. So next expiry, the put lines are shown by this kind of light blue line here, and the calls are shown in the green line. So this is showing that the green line closely matches the orange line, indicating that quite a bit of this is traders have been buying calls that expire this Friday, and then they're starting to sell them as price has approached this 80 key gamma strike and all the liquidity there that's shown in the Bookmap heat map. All right, let me clean this up. So we've just got the total signal. Very interesting. And definitely something to look for if you are trading AMD today. All right, the next one is Meta. And I'm going to zoom in on the morning session. It just has chopped since the first jump in the morning. So again, showing that traders are taking positive delta positions. Price is moving higher. Let's go take a look at Bookmap. And notice how once Meta reaches this 175 key gamma strike, that this price action just stalls out. Hero levels off a little bit, moves slightly down, and then price follows. Let's go take a look at Bookmap. Well, it looks like now that traders have come in and taken price above the 80 key gamma strike in AMD. Let's go to Meta. And it looks like they're finally moving Meta higher as well. Let's take a look at the up until about noon. And this is showing the quick uptrend up to the 175 key gamma strike here, and the liquidity at that level. That was the first target. Price continues higher, and then volume is really concentrated up and down in this chart range volume profile. Volume concentrated up and down around that 175 level. And now price is moving higher. This is the upper edge of the expected move. That's for the week, and that's based on the options market. A 1 standard deviation up or down. I change that once a week. All right, so that's Meta. And let's take a look at NVIDIA now. All right, so typical of NVIDIA, it chops around for 30 minutes or more, 30 minutes, 60 minutes in the morning, and then finally resolves one way or another. And today it has resolved higher. Price action has resolved higher. All right, let's go take a look at Hero. And we can see the chop really this morning for about 90 minutes. And then Hero starts to move higher and price moves higher. All right, let's see what traders are doing. So they're selling puts and buying calls. No insight really, no additional insight from separating out the signal. And I do find NVIDIA somewhat harder to read than other stocks. The correlation is not quite as strong as Tesla, for example, which we'll look at in just a minute. So let's go back to Bookmap now. So nice strong uptrend. And targets, liquidity targets, looks like the next target above, or the targets were at 236, 237, 238, then 239 may be the next liquidity target. And price seeks these liquidity targets. All right, let's take a look at QQQ. Let's go back to Hero. Take a look at QQQ. All right, another choppy morning session. This first, just kind of this opening level, I interpreted this little move here as kind of a divergence long setup, and it didn't last long. Traders started fading that move immediately, then moved up. And then finally the move comes, the definitive move higher comes about 1050, 1055. Let's go back and look at Bookmap. So here is this is the initial long here with that slight divergence, and you can see that order flow confirms that. And then here's the more sustained entry long there, and again order flow confirms that. Let's just zoom in on that. And there is a level target here first at the 295 LG2, that's large gamma 2. And that is LG2 means it's a significant level. The significance is ranked from 1 being the highest and 5 the lowest in terms of the amount of gamma at that level. So 2 level targets and liquidity above. And order flow confirming entries, especially this first entry. So not the best setup, but that's QQQ. All right, let's take a look at Tesla. And with Tesla, there is very often, almost always, a very strong correlation between hedging flow and price action. So hedging flow confirming both the downtrend and the uptrend. Let's see what traders are doing. So this is interesting. They are selling calls and buying puts net, or selling puts, I'm sorry. So they're selling calls, that's negative delta, that's shown here. Oops. Wrong thing. So they're selling calls, that's the notional value, and they're also selling puts. And that is positive delta, and that's the notional value. So this is interesting. Yeah, and that actually, so JEC says basically strangling Tesla, and that's kind of unusual for Tesla. Usually they're buying calls or buying puts. But that actually reminds me of something that I wanted to take a look at and forgot. Let's take a look at, this is the SPX, this is Thinkorswim, this is a one-day chart, and this is my volatility chart. And what this is showing is the thing that I want to focus on and what's been working for me, other than the day trades that I talked about, is selling premium. And this is showing IV versus HV. HV is historical volatility. This is volatility of the actual underlying looking back. And IV is the implied volatility that comes out of the options market model, whatever you use, Black-Scholes or whatever. And this is the red line is showing implied volatility, and the blue line is showing historical volatility. And this is especially good for trading or selling premium in this condition where implied volatility is greater than historical volatility. And again, this means that fear is overstated, which is often the case. And it's been a very good environment for selling volatility. So I meant to point that out earlier, and JEC, thanks for reminding me to show this. Okay, yeah, JEC is looking at the same thing. I've had this this indicator. I don't know where it came from. I've had it for at least a decade or more, and this is something that I always look at. I'm trained as a premium seller. So this is again comparing IV to historical volatility and indicating that fear is overstated. All right, so there's a question in Discord. Can I show this chart for Tesla? All right, so let's take a look. You want to see the Thinkorswim chart for Tesla, I assume. So let's go take a look at Tesla, and that may or may not be the case. I'm going to zoom in. So this a single stock is going to be different than an index. Traders typically use SPX in particular, money managers, to hedge their portfolios. So that's why Spotgamma assumes that traders are long puts and market makers are short puts for the index products, SPX, SPY, QQQ. So again, what money managers do, hedge fund managers, portfolio managers, mutual fund managers, they will buy SPX puts to hedge their delta exposure and typically pay for those by selling calls. So anyway, that going back to SPX here, that indicates why this is often a persistent condition, but it has been more prevalent recently, indicating it's a good time to sell premium. All right, let's go back to Bookmap. There's Tesla again, and here's another example of CVD not necessarily confirming price action. And notice all the pink dots going down and up. So it's, in this case, and often, I look at Hero first, and I would take my signal from Hero, not CVD. Okay, and there was a question or a request to see AMC. I've got that on my other computer. Let me share my screen and we'll take a quick look at that and then wrap it up. Keep forgetting to change my pen tool. All right, here is AMC, and Persian Lion wanted to see this. I don't think he's in the webinar. Maybe he'll watch the recording. So there's AMC, and let's take a look at AMC here with Hero. There's AMC. Strong correlation with hedging flow and price action. All right, so Persian Lion, there you go. There's AMC. And then let's wrap it up. Let's take a look at the S&P 500 one more time. And notice here that I'm looking at the SPX plus SPY signal. I talked about this yesterday. I think this is providing the cleanest signal for the S&P 500. And I'm looking at this whether I'm trading SPY, SPX, or ES. All right, so it looks like traders overall are fading the move higher. Shown by the hero signal, trending lower. All right, let me take a final look at comments. All right, first of all, in Discord, all right, JEC comments, first day in a while, hero signal was the same direction on the SPY and SPX. So let's just take a quick look at that. And notice also that the hero signal is both strong for SPX and SPY, and we've looked at a couple of days ago, a few days ago, that SPX was in one end of the range and SPY was at the other end of the range. All right, so that's SPX plus SPY, and we can see that it is trending down. Now let's take a look at SPX. So just SPX alone, a little bit more choppy, but it is trending down, and the notional value is negative. And SPY is a little bit more clearly negative. And notice the notional value at minus 925 now, 926 is much higher than the notional value for SPX. So showing this is pretty typical that SPY by far is options trades in SPY are dominating today. But then again, SPX and SPY combines those two signals. All right, so the last question that I'll take in YouTube, Colin asks, QQ option flow seems negative, but price is up. So I don't know if SPY options flow can override QQQ. If you're trading just QQQ, I would look at order flow and hedging flow for QQQ. Keep an eye on the S&P 500, but the stocks that the primary stocks that make up both those indices are the same, and those are the stocks that are shown on my watch list: Apple, Amazon, Google, Microsoft. So let's take a look at QQQ. And let's just zoom in on this. So I would say that, of course, the hedging flow was positive, was bullish up until about noon. Choppy but bullish. And then around 1 o'clock, it really turned negative. And it took a while for price to respond. And let's go take a look at Bookmap. We'll take a look at QQQ again. So this looks like a good, would have been a good short setup. The way I approach that, there's a clear divergence in hedging flow and price action. Once I see that, then I go to Bookmap and I just watch order flow for a reversal, and this gives a a very good level to watch for that reversal. So you see the divergence in Hero, move over to the Bookmap, look for a level that price might reverse, and then watch order flow for the reversal. So there you go. There's your short setup at the 296 volatility trigger. And Colin asked, do you usually see options flow appear first, then price follows later? Not always. It happens more often in the index products, especially SPY, SPX, ES. I look for divergences. It happens occasionally, not as frequently in QQQ, but we just saw an example of that. And then single stocks occasionally, but the divergences happen much more often in the S&P 500. And Anthony asked, where did that 39.74 level for SPX come from today? Take a look at the recording. I talked about that earlier. That was the 39.74 combo level for SPX and SPY put gamma, shown in terms of the SPX price and then converted to an equivalent ES price. So right, it's approximately ES 3980, but take a look at the recording. I talked about that earlier today. Okay, that is, my time is up. Time has passed. I think I've answered all the questions. Thank you very much for watching. Thanks for your questions and comments, and I will see you tomorrow. Thanks again. Bye.